Good evening, Alan. There was the debate last night I think you want to cover.
Yeah, hi, Chris. Basically, what I wanted to just point out, two things that seem to be in the press this morning, kind of consensus of interesting things that happened. So one is that Trump, the consensus was that Trump had to kind of land almost a knockout blow on Biden to kind of stand any chance, or at least to start a serious comeback in the polls that might give him some momentum going into the last couple of weeks of the campaign, and that didn't seem to happen. At least that's the initial thoughts of the press. So that's kind of one thing, and that we'll come on to it a little bit later, is the dollar weakness potentially because of that. And the second thing was something more interesting for us, I think, as a company, is the fact that Biden came out and actually said, and I'm going to quote, that he would transition away from oil and gas to renewable energies. And that is quite a statement from any nominee for American president. So I think, Chris, you had a chart that you might want to show, which was one of those renewable energies that might benefit from that.
Yeah, I was going to say the one that's been gaining a lot until these last 3 days was solar energy. So, you know, they had a 30, what, almost 40% run up in 2 weeks, in the first 2 weeks of October.
Right.
Yeah.
The other issue that we noted this week was a note from Goldman Sachs, which again I'm going to try and quote from. So they said the chances of a so-called blue wave have risen to more than 60% based on Biden's growing lead over Trump in the polls. They also said that they suggest investors should short the dollar against a volatility-weighted basket made up of South African rand, Indian rupee, and the Mexican peso, as well as buying Australian and Canadian dollars and the euro. The wide margin in current polls, this is a quote from Goldman Sachs, the wide margin in current polls reduces the risk of a delayed election result. So they don't really care who wins. It's just the fact that it would be a clear-cut victory for either man is the positive there. And the prospect, so the wide margin in current polls reduces the risk of a delayed election result, and the prospect for near-term vaccine breakthroughs may provide a backstop for risky assets. In other words, things are all going to be great, and you might as well go back into risky assets such as emerging markets, for example, which we'll maybe look at in a few minutes.
I think that's a good point, Alan, because a lot of clients always ask, oh, you know, my portfolio, if the dollar goes down, how am I going to be affected by that, right? And if you're heavily weighted in dollars, or let's say, you know, your prime currency isn't the dollar, but you're in dollars, there's this always kind of currency hedge risk that they want to talk about. The reality is when the dollar goes down, risky assets go up. And so that's usually enough to spur a stock market rally. And so being allocated to US dollars, but allocated in US stocks,
right,
your portfolio is going to probably benefit and override any kind of devaluation.
Right. The other point that I think we can mention also is not just, well, we might agree with Goldman Sachs. The other thing is that if a Biden win would mean a bigger stimulus package, or a stimulus package of some description, which would, again, the worry is that that's going to be printing money, and that's going to deflate or that's going to devalue the US dollar because it's printing money. So, right. I mean, one of the things we talked about, Chris, and I know you're not sure about this, and neither am I, but I thought it was worth a look at, is gold. And we've got clients that maybe will take on Goldman Sachs advice and say, well, yeah, we can go into risky assets, but at the same time, if the dollar is going to weaken, that should mean something like gold and maybe silver and other gold mining shares and things like that are going to benefit. But you're not sure.
So if you look at this dollar-weighted index that Goldman Sachs is kind of talking about shorting, it's UUP in an ETF, right? It's this basket of currency. We really have to see a breakout below some of this congestion here, and that's what they're expecting. But you're also, when we looked at gold, we see gold flatlining here, and I don't see any. There's talk. It's a good thing to go for Goldman Sachs to point out what their beliefs are, but there's no market response for this yet. So it's early to to be saying, oh, this is a
Right.
definite thing. We can see the trend.
Is that just because the consensus hasn't been? I mean, we're
No,
ahead of the curve in that respect, maybe.
Yeah, I think Goldman's trying to come out ahead of the curve with their thoughts about a big blue wave win. Just in the markets, it's not showing it. So it's nothing to say, oh, yes, definitely gold is. I mean, we pointed out that maybe gold broke out of a downtrend here, but it's still flatlining. It's down these last 2 days. So I'm not overly aggressive saying we all need to bail out on risky assets and get into gold here because we're going to expect another leg up. Not quite yet.
I think that I'm just going to take your screen, Chris. I think there's a couple of things that we wanted to point out regarding U.S. economy this week. I mean, I'm hopefully sharing this U.S. IBD TIP economic index, optimism index. Hope you can see that. I mean, that's just a huge spike in the last month or so. Okay, from a admittedly low base, and you're seeing the V-shaped recovery on a number of different economic indicators over the last 6 months or thereabouts since the huge fall because of coronavirus at the beginning of the year. But that's a huge bounce back for economic optimism in the US. And I think you've got another graph, Chris, which looked at house building and housing starts in the US. I don't know if you have that graph handy, but while you're bringing that up, I mean, I think it was something that there was a huge
right here.
Start in housing sales, huge.
Well, both in the existing home sales and in the median prices. So
right.
Home sales were up 10.5% year on year. And it was an increase of 2.4% sequentially month over month, which is pretty.
They're huge figures,
right? And then the prices are moving up too, which puts you at
as we discussed earlier, kind of lightheartedly, that people are moving from the city out to the suburbs, but that can't be the main reason, because then you're not. Okay, you're moving, but you're not creating a new market. You're just moving from
what this is, and where everybody's looking for when it's going to taper off is it's low mortgage rates. So everybody's buying new houses because it's very easy to sell your house right now, and it's also very easy to buy a new one with mortgage rates of less than 3% in the United States.
Right.
So you can get at least a 15 or maybe 30-year mortgage for around 3%.
Yeah. And again, if your lighthearted comment was accurate, that people are moving from the center out, which would indicate that that's higher prices also to lower prices, because city centers are per square meter, per square foot are generally more expensive than the countryside. But then again, who is buying the city center apartments? Because surely if it was a fire sale and people were just happy to get out of the city center, then that would reflect in negative prices, or prices going down, or certainly not up that much. So I don't know. It's
interesting to look into the number of renters versus buyers or owners in those changes, because I think there was a lot of people
they're buying rather than renting
in these high expensive areas, right? Like San Francisco, Austin, Texas, LA, stuff like this. And then now, because the properties become available, they can buy into those. So that's my guess. It would be
it's just they're really. I mean, the fundamental thing is that the U.S. economy is that those are interesting figures to show that it's not in deep recession. These are positive figures that can be reflected in the stock market in general. I wanted to go back
here's just a blow up graph of the one you just showed, Alan. So it just showed from September to October, this IBD TIP economic optimism index is up 22%, and that's quite huge. The 6 month outlook is up 30%. So people, and a lot of this I think is the optimism around of a blue wave. I mean, people are hoping that they're going to get a stimulus package, that the stimulus package will be huge, that interest rates will be low for a long time, and that the government will become more accommodative and less combative towards China and other things, and more accommodative to grow U.S. businesses. So that's kind of what.
Just while you're talking about China, maybe I grabbed the screen again. because I wanted to talk about, if we go back to dollar weakness and emerging market strength, then there's two charts that I thought would be interesting for me this week. And I'm a bit of an Asia bull, and I'm kind of fixated on it a little bit. This was Northeast Asia exports, so that's predominantly China, Hong Kong, Taiwan, and Korea. Mainly, I mean Japan also, but it's mostly the more emerging economies. But if you see the red line, which is the year-on-year exports, I mean we're way back. We grew a lot in the last month. I mean the line is really bouncing back. It's the sharpest year-on-year rise since October 2018. And the break against the sequential trend in the last 3 months is the strongest since March 2019. I mean, these were huge. China's exports up 9.9% on the year, Taiwan 9.3% on the year, South Korea 7.6%, and only a fall of around 1.7 year on year from Japan. So Japan, as I mentioned, was kind of the negative of that. Even if you look at other, not quite Northeast Asia, but you've India, September's exports rose 6% year on year in dollar terms. Above historical seasonal trends. September rose 15.6% year on year in Singapore dollar and above trend. Indonesia, September exports dropped only 0.5% year on year, but that was mostly because of oil and gas, which was down 15.3%. Non-oil and gas was actually up above trend. And still, if my ASEAN, which is one of my favorite funds, and you can see a huge fall off, and I thought it was quite undervalued. Where you see it about 150 at the beginning of the year, and then a complete falling off, almost like 30% there, back down to below 110, and then it recovered, and then we've got a little bit of a fall off again as the second kind of wave is hitting the tourism markets of Southeast Asia, for example. But I still think it's undervalued, and of course, if you're going to have dollar weakness, then these are the economies that are going to benefit. And Thailand is going to benefit sooner or later because tourism is going to come back at some point, sometime. Might be a little bit early for that, but that's kind of my thoughts on that.
Yeah, so this is the ETF, the ASEAN into ETF.
So I mean, I didn't think it was overvalued because it's not performed that well over the last few years. I mean, not hugely. It's done okay, but not great. And so to have a huge fall and then not really come back.
Yeah, not really recover here.
Not really. It's definitely not a Nasdaq. I mean, we looked at the Taiwan chart earlier, which is essentially the Nasdaq.
Yeah, the Taiwan chart looks phenomenal, and that's just because you have things like TSM, the Taiwan Semiconductor in it, and basically chips and displays. So
it is, yeah, that's it. Yeah.
Good stuff.
Good for them.
I wanted to just quickly highlight. I posted two things as we come close to November. Put the seasonality up, and then I put a Halloween trading strategy up. And starting next week, we start into a really bullish period in the U.S. markets, typically and especially in election years. But I want to just clarify for people that the election year is really good for the Dow and the S&P 500, and not so much for Nasdaq in November. And we've begun to see that with the outperformance of the we mentioned this last week of the Russell 2000 here. It's almost at its all-time highs for this year, except for post-COVID now. But whereas the Nasdaq is really falling off continually here in the last part of October. And so this move towards small caps, this move towards value names, where the S&P 500 and the Dow Jones Industrial Index are really the ones to watch for areas of growth. And we saw that again in the industrial stocks are holding up well, and even the home builders we talked about just now because of the prices, but we mentioned before the transports. And so those are this is going to become kind of a bifurcated economy even with a Biden win, where tech is under scrutiny from the Department of justice for monopolizing industries, and they might have to be broken up. But at the same time, what really works in November is the Dow Jones and the S&P 500 and the Russell. Russell 2000 isn't that bad either towards the later parts of the month. There's not a lot of bullish or bearish days compared to October, but the first part is bullish and the last part is bullish. And that's kind of where we're looking for next week and the week after, a kind of a bullish run in the stocks. And that would correspond with providing us a signal that in terms of seasonality, that it's a good time to get back into the market. So we'll be watching out for that. However, and we have to be careful here, the NYSE is now rolled over and given us a sell signal on the market. So we're concerned, being that it's Friday, that this might be one of these first shots at it. And then later on, we see a run up. And then later on this year, it might come back to haunt us, that the Halloween bullish period might just be a short-lived bullish period for the year, depending on what happens with the elections and if we get a protracted battle after the actual election. And I wanted to show that the put call ratios are rolling up, which is negative for the market also. And of course, coronaviruses are increasing. So beyond the election, we still are confronted with some of the things that have haunted us earlier this year, coronavirus infections, a very bullish stock market requiring now government intervention and some kind of stimulus package. A normal election is needed to keep this market afloat. If anything but a normal election process happens in the United States, we can expect what we saw back in 2000, Bush and Gore, where the markets fell for 3 months straight. So we don't want anything abnormal. The market wants certainty, and that's really where what we have to watch out for. So really trying to stay nimble here. On the Telegram channel, we posted a lot of Yandex and CCXI and a couple other Lyft and a couple other stocks here that we think are interesting outright, just either their value names or their specific plays in certain parts of the economy.
Yeah.
And
there's some big bullish bets going on for later in, well, early 2021 and even into 2022, I think, or late 2021. One of them was 2022, I think, Chris, that you posted. Was it Lyft that was on?
Yeah, I mean, some of this stuff is actually quite bullish
2021
longer term, but
yeah,
Lyft had somebody bought Leap called
2023.
Almost $3 million. So this is quite a big bullish bet, but that doesn't mean he's going to hold them that long. It just means that
and somebody
is actually on the Californian elections, there's a proposition about settling whether their employees are going to be considered employees or just independent contractors, and I think that's going to go good for the company either way, because it kind of settles the debate, and you can't have all these lawsuits out. So, but Yandex was an interesting, again, because of the Yandex Taxi and the food delivery services. With coronavirus,
it was also hit down because of the Tinkoff merger fell out, right?
You got this nice chart here set up, and it just looks like it's ready to roll back over and take a turn up. So this is an interesting chart, definitely in play right now, with earnings coming out in the next couple of days. I think Monday next Wednesday. And so this is a really interesting play. We mentioned CCXI, which is
I was going to say, what happened to CCXI? Because I'm curious about this, whether the insider dealing really had
this is actually interesting because there's a pretty large bullish bet on this with expected clinical trials coming out.
Right.
It's a chemotherapy type of stuff for cancer treatment, and it's a pretty interesting. It's a $2 million bet that for November. And this isn't like this isn't far out. This is November. They're supposed to come out with these clinical trials, and they're expecting the stock be somewhere between 70 and 95. I mean, you have to really expand this chart, but you're looking at from here to up here that this thing is going to hit. So a huge bullish momentum. You see two great candles in this thing right now, and I think there's a lot of potential just as a quick trade here. And there's other stocks. And I feel bad because I don't put a lot of them on the Trade Talk Telegram channel, but
well, we can't invest in everything either. Trying to pick and choose them a little bit.
It's also not a bullish market, so I'm really conscientious of the fact that it's easy to make money when the markets are completely bullish and everything's going up and everybody's buying. But when you're in this kind of election craziness, a lot of chop fest, the tech stocks aren't doing well at all. You got to be really choosy, and you got to have some conviction. And we look for conviction in the options market where people are putting on huge bets on things. And
what's the latest with my favorite, DraftKings?
Yeah, I mean, DraftKings is hammered. Look at this. I mean, this is hammered because there's no sports. But look where it's come down to. This area of huge volume support here. I mean, sometime this is going to become a huge buy again, and you're going to get a run up back up to 65. So it's just a matter of, can we get sports to happen? Can when two football teams come out, I think in the last 4 weeks, two football teams came out and said that their players actually were sick and they're going to not play the game. So it's not just the audience. It's if you can't play the games, then there's nothing to bet on. So really taking a toll here. They did do a secondary offering. So there's a lot of things happening just to raising finances for this company. But the potential here is huge, actually. And there's a couple. There's others that aren't so ahead in the game. GAN is another one we mentioned, and then Penn Gaming was another one we mentioned. So this is a space that's kind of interesting, and our pick is DraftKings, but that doesn't mean that the whole thing is just around one stock. So that's what I have, Alan. It's kind of a long session here. I think that's good enough for today. Yeah.
Yeah, that's great stuff. Good.
Okay. All right. Well, then we'll see you next week. Take care.
Yeah. Catch up later.
Yeah. Bye-bye.